Welcome to the WellOff Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Thanks for joining me. Today I interviewed Robin Valadares, who is a physiotherapist, an investor, a coach, and he does so much to give back to people in his industry, the people that are involved in the healthcare industry. And on this episode, we talked about how working years in his industry are very limited. And so there has to be other ways to generate income. And that's what got him into real estate investing in the first place. We talked about clinic ownership, his strategies with the BRRRR method, using a HELOC to grow his portfolio, starting off in Ancaster and St. Catharines, and then diversifying later on into stock options. So we have that on common. So I know you guys are going to enjoy this episode. Make sure to share this with a friend or family member. And also, if you guys want to talk a little bit about some multi-unit investing, we have some apartment building opportunities, and I'm more than happy to share them with you. Just feel free to reach out to me on Instagram, WellOffX, or go to welloff.ca and connect with me there. Just book a call. And then finally, make sure to leave us a 5-star review on the Apple Podcast platform so we can continue to grow and share this with other people. There you go. Enjoy the episode. All right, I'm here with Robin. Robin, thank you for joining me today. We were
absolutely, George.
We were supposed to obviously meet in person, but there was a slight complication here, so we're doing this virtually. But I appreciate your time. I always start off by asking you about your childhood. So tell me about where you grew up and a couple things you remember.
Yeah, great question. So I was born in India. My brother and I, my older brother of 2 years, we moved here with my family, mom and dad. When I was 5 years old and he was 7 years old, and we moved to Etobicoke, southern GTA. Moved in with family at the time because we knew nothing about the area. And then soon after we bought a home, or my parents bought a home in Oakville. And then my childhood, for the most part, was living in Oakville. And Oakville 20 years ago or 25 years ago is a little different than it is currently now. So very much the immigrant lifestyle. Didn't have much. Mom and dad had to kind of really, dad worked at Kmart to make ends meet, and mom stayed at home with us and kind of made sure academics was paramount, because as an immigrant family, that's one of the paths to kind of freedom, in a sense, is to have a good, secure job. So brother and I were raised to study and be academics. And my brother now is an engineer, and I'm a physiotherapist. Mm-hmm. So 6 years ago, I moved out of Oakville and found a place in Stony Creek where I currently reside. And I practice physiotherapy as my, the main traditional way of earning an income. I have other streams, which we'll get into, but that's kind of my upbringing.
Yeah. Before we move on and talk about like your journey into your work and real estate and all that, just wanted to ask you about your last name. So you have what sounds like a Spanish last name. So tell us a bit about that.
Yeah, I get that a lot, especially when I travel south. It's pronounced Valadares. It's a Portuguese area in India that was colonized by the Portuguese. Right. A majority of India was colonized by the British. And then some portions on the East Coast are by the French. So as a result, through generations of kind of the Portuguese colonizing more of the locals, we tend to have more Portuguese heritage. So Roman Catholics by nature eat a lot of fish, a lot of type of Portuguese-based dishes than the typical Indian fare. So that's where the last name comes from.
Okay, cool. Yeah, that's India has such a cool history, and it's been colonized by these different, like England and Portugal, I guess, and there's all these different cultures that are infused with the Indian culture. So it's cool to see that. Okay, so let's talk a bit about your journey after you got your degree. You became a physiotherapist. I know you have a strong mission in life. I know you're a real estate investor. And just tell us a bit about what your beliefs are when it comes to real estate investing and the work that you do.
Yeah, great. I exited the traditional work university degree after my master's in 2012. And my last placement, one of my preceptors, the clinical instructor at that time, asked me, Robin, take a look at how many physiotherapists are practicing over the age of 55, 60, or 65. In our profession, when you look at it, and people at the clinics I volunteered at, I couldn't think of anybody still practicing actively with their hands and their body over the age of 55. If you look at other professions like massage therapists, occupational therapists, or chiropractors, it's rare, because over the course of your career, your body will take a little bit of a beating manually. Your mind will, because you're dealing with people's complaints on a daily basis. So at that age, at 25, I was stuck in my head to how do I generate income? Because my working years are finite. I can't work till 65 like my counterparts who are architects or engineers or lawyers or accountants. I need to have so much income saved up so I can have that for retirement. And as you know full well right now, George, is some of the issue with retirement isn't the money you earn, is how long you're going to live. With tech these days and medical tech these days, our life expectancy is growing year over year.
Hmm.
So I knew at an early age I needed to leverage myself to earn income irrespective of me trading my time for it. And that's where real estate was something that I was fortunate enough to get into in 2014, just 2 years after graduating, where I first purchased my first rental property in Ancaster.
Okay. I think we actually graduated the same year because I graduated from U
2012.
of T in 2012. Yeah, yeah.
There you go. There you go.
Wow,
See? Yeah,
interesting.
yeah.
Good for you. Just out of curiosity, you mentioned that other physiotherapists that you were seeing, they weren't working into their 60s and whatnot. What do you think happens to them at that point? Do you think most of them are well established financially, well enough established that they don't have to work, or do you see them getting other jobs just from personal experience, what you've seen?
Yes. Another one. And it's four things I talk about to my students. Is one of them is clinic ownership. The next gradual stage, after you hit a certain cap with trading your time, is to own the business that you've worked in for so long. So that's the next logical step. But doesn't mean just because you're a good clinician doesn't mean you're a good business owner. And fully know that. The next thing is to educate. So you do a clinical instructor role, you enter into academia again, and you teach the new generation of physiotherapists.
Mm-hmm.
The third thing is you switch careers entirely. A lot of our profession will go from the private practice where I work currently. They might go into the public sector or work for big conglomerations like insurance companies to do more of the claims adjustment because we understand the body that way. And the
Mm-hmm.
last one is the last one we talk about is retirement. And that could be just because their spouse is earning an income, they might be home with children, or the fact that they're just done working because they're financially set.
Mm-hmm. Yeah, makes sense. Yeah, it's a scary thing. Like for somebody who's worked so hard, studied so long in school, and then you're like you said, your body kind of doesn't allow you to continue doing this into your 60s. So you got to make sure you're ready. And it's really, it applies to anything in life. You should be setting yourself up so that you're not working forever. I think a lot of I don't know, just from my personal experience, a lot of immigrants seem to have this idea that like I'm never going to retire. I can't see myself not working anymore. But it's important to get there because you don't want to. If you're working in your 60s, it's probably not because you want to. It's probably because you have to, right?
Correct.
You
And
know.
my definition of retirement is having the ability to make that choice. I love what I do, but I know I can't do it forever. But I want to be given the choice to work when I want to,
Yeah.
not because I need to. And I don't think many people have that choice.
Yeah, absolutely. Yeah, and it's different if like I spoke to someone yesterday. I had dinner with with investors, a couple investors, and I asked them like, "Do you plan on retiring? Do you plan on just stopping one day?" And he's like, "Honestly, I don't see myself doing that. I see myself just continuing to grow the portfolio, but who knows? Things might change as the kids get older and whatnot. Things might be a little different, right?"
Right.
Okay, so what was your strategy for investing? What were you targeting? Did you have a cash flow target? Did you just have like a net worth target you were going after?
Yes. So when I first started, I started listening to podcasts. Bigger Pockets was in 2012. That's probably the only podcast I could think of that was very US centric. And I learned how to purchase a property. I didn't do it seamlessly. So I bought my first property and the idea of a buy and hold. I'm a conservative investor, a little more risk taking nowadays, but more conservative back then, as to just buy something, don't speculate, make sure it pays you. The exact amount, I didn't do too well with the math. I just want to know I was a surplus versus a deficit. So I bought the first house in Ancaster, and the math made sense, but the execution was poor on my end because I treated that business should have been a business, but more personally, I was more for the bleeding heart where the tenant came in, single mom with three kids, and I was like, okay, let me help this individual out, and I'll give her this property to rent from. Unbeknownst to me at that time, she was a professional tenant. So she came in, gave me a check, bounced, second check, bounced. And then I had to go through the whole eviction process. Took me 3 months, lost about $8,000.
Yeah,
That's my first experience dealing with a tenant. It's a blessing now in hindsight because
yeah,
that taught me so much about screening tenants for subsequent properties. And that $8,000 was tuition in my learning, better spent in that and earned me a lot more income than my actual traditional career in the last 8 years.
yeah,
So that's
yeah.
the irony of it.
Yeah, it's funny how that works because so I've been a realtor since 2013 and I bought my first property in 2017, my first rental property. And I've qualified my tenants myself for that property, and they turned out being very bad tenants. Even though I had experience finding good tenants,
Okay.
For some reason, maybe because it was a new market, like I was in the Hamilton market, I wasn't familiar with that particular market at the time. And yeah, I got into a similar situation where the tenants owed me a lot of rent and they weren't paying and whatnot. But for some reason, it seems like when you get involved in real estate investing, you're going to make mistakes. There's no way to avoid it. No matter how many people tell you that not to do certain things, it's like you just got to make the mistakes and go through them.
Firsthand, right? And that's what
Yeah.
I think the wounds teach us, and we take it more to heart when we actually make the mistakes and know what the fallout is, so we
Yeah.
don't repeat it again, right?
Yeah, exactly. And I know I've learned my lessons from that and I'm never making that mistake again. But as you get more experience, you learn more and more. You make mistakes here and there, and then you just get better and eventually you become a really good investor.
Correct. And
Yeah.
that's it.
So, okay. So you started gathering properties. How many did you end up going? Like, what were you targeting here? What were you trying to get? If we can kind of dive into your goals.
I wanted to supplement my income with something less active. I wouldn't say passive entirely because real estate ownership and being a housing provider isn't all passive. So you're kind of semi-active position. So I wanted to supplement my income doing that. So that's when I was in Ancaster. I bought that property, and after I had that tenant evicted, the next subsequent tenants were great, and I started to feel what it felt like to have actual cash flow coming in.
Yeah.
Then I was okay. Now I have this asset; it's appreciated. What can I do to lever this asset to purchase more? Um, that's when I kind of took out a home equity line of credit, a HELOC, and used that as a down payment for my subsequent property in St. Catharines. And I
Hmm.
try to follow the trajectory, kind of the rock star real estate approach of buying things that are following major infrastructure changes like highways or metrolinks, things that are areas that have high population growth and areas that high growth in population or income generation growth. So that's where St. Catharines at the time was like, oh, let's go down this route. And that was in 2017
Yeah.
after I bought my principal residence in Stony Creek.
Okay. So you said 2014 was your first one. Where was that,
Mm-hmm.
by the way?
Ancaster.
Okay, 2014 Ancaster, then St. Catharines. And now at this point, are you still looking to grow your portfolio? Is that a target of yours?
Yes, that is the plan. But I've also diversified because I was looking at my net worth statement and I saw that my real estate holdings were kind of cannibalizing the rest of my net worth. I'm like, okay, I'm heavily into real estate.
Mhm.
And as you fully know, diversification will help preserve wealth, concentration will help generate it. So I was like, okay, I have some wealth right now. Let me try to see if I can diversify and diversify it. So I started to look into more equities. And that's when I came across stock options and trading in that respect. Then I started looking at alternative asset classes like art, wine, and crypto, started to doing that. But the goal is to accrue some more real estate. But at that current juncture, I had some personal things I was going through and things that kind of put impediments on my progress.
Mhm.
But now I'm past those, so I can start growing again.
Now that the stock market has taken a dip in the last, say, since like January 2022, maybe February or March, but early 2022, there's been quite a bit of a dip in most stock prices, and there's some volatility now. What are your thoughts on that? Since you've diversified, how do you feel about the stock market now?
Yes. So yeah, obviously I'm unrealized loss at the moment based on my assets, but my time horizon, I think it's important to talk about time horizon. My time horizon is 10 or 15 years. I'm looking at stocks right now, like I'm going into Lululemon, looking at huge discounts. These are big sales, and I can purchase these things because I'm not selling them next year or in 3 years or in 5 years.
Hmm.
So if I have the time horizon, the mindset that I'm going to sell them in 15, 20 years, right now I can afford to take a little haircut and purchase these things on sale because I know in 10, 12 years, they're going to be higher than they currently are because that's the historic history of the stock market. There's
Yeah.
always been an all-time high going forward.
I'm assuming that when you're talking about purchasing these stocks through naked puts, you're selling naked puts and then getting
Correct.
called on them eventually.
That's my one portfolio. Yeah. So that's the
Yeah.
trading portfolio. And then I have the buy and hold, which I just buy them and just let it ride
Okay.
for years.
Yeah.
So that one, yes, I'll purchase. But yes, I would sell naked puts. I've done my trading through Omar Khan,
Hmm.
the Theta Trading Academy. So I've done the naked puts and then selling covered calls. That's all I
Yeah.
use.
Yeah. Me too. Me as well. Actually,
Yeah.
I took his
Yeah.
course a couple months ago. I've been trading a bit with that, but I'm not too heavily invested yet in stocks. Just kind of feeling it out, and I think it was a good decision for me to feel it out because as soon as I started investing, the market just took a big dip. But like you said, I think these are great opportunities. Like I know a lot of people look at this and say, "Wow, I don't know what to do because I was expecting the market to be here and it's way below that." But as you mentioned, it's a great opportunity if you are into buy and hold long term, then you can pick up some stocks for a good price, and that applies to the real estate market as well. There's some good discounts right now on properties. If you have the courage to go through and you know your numbers and you know the market, then you can really capitalize.
Agreed. And knowing what you know now, take yourself back to 2008, 2009, 2010, even in Southern Ontario or south of the border. Are you kicking yourself now that you were in a position to purchase property back then?
Mm-hmm.
I know I am,
Yeah.
even though it's 10 years removed. Absolutely. So what's the next 10 years going to be? It's not going to be all roses, but right now I can probably tell you that it's going to be higher than it currently is right now.
Mm-hmm.
When,
Well,
I
I
don't
know
know.
Tony Robbins believes that every 10 years there's going to be a crash of some sort or a recession of some sort. So if you look at it that way, then when the prices drop like this, it's really an opportunity. If you expect it to come back up and then go back down again, it's just the way it is. But in the long term, it's going to be the values are going to increase over the long term.
Precisely. And that's what I'm trying to do in the last few months is give myself as much access to capital as possible. So I'm
Yeah.
liquid. So if there's a deal there, my issue is not raising capital because I have that on hand.
Yeah.
It's just, can I close the deal?
Mhm. Tell us a bit about what you do to help other practitioners, other people in your industry.
Thanks for bringing this up. Yes. As you know, as I know, either in undergrad, high school, postgrad, secondary degrees, there isn't a lot of emphasis on financial literacy or education. And it's baffling to me why this is the case. We learn about a lot of things in school, and I've done 6 years of school. And I've had one individual who's a financial advisor for 1 hour give us a talk. And that individual was more pitching about trust him with his services rather than teach us the basics of an ETF versus bond versus stock or versus a mutual fund. So I found this as an issue, and I love this stuff as I started in 25 years old. So I'm like, if I'm struggling with this, I'm sure my peers are, because I know I've gone through the education. We don't get taught it. So how many other people are in the clinic right now who actually have to trade their time for money? And that's a lot of us. We are stuck in the, not stuck, but we're in the clinic. We're seeing people one-on-one for the next 8 hours a day, but our income is solely derived by that time we spent and that location we're in. We
Mhm.
can't generally work from home. And our value isn't tied to if we close a deal and get X percentage of the deal. It's
Mhm.
trading your time for money. And that's
Yeah.
so finite because we spoke earlier that you only have about 20, 25 years or 30 years of practicing before you can't do it anymore. So I'm
Mhm.
like, I'm struggling with this. My peers are definitely struggling with this. So last year, I started to create a financial literacy or education business geared towards health professionals on how to divorce yourself from trading your time for money. And that's learning the basics first and foremost and utilizing those basics to kind of generate wealth just for yourself as well as your dependents and hopefully generational wealth for your dependents after that.
Mhm. Okay, so you started this program. Is this something a course that people sign up for, or is this something that you teach live in person? Is it videos that you share?
Yes. It's a combination of both. So I have two recorded courses that are held on a platform, a hosting platform where individuals can go and register, pay the fee, and watch it on their own time with different lessons and modules. So that's more of the kind of pandemic way of learning. Now that we're kind of easing out of the restrictions, I'm doing more in-person courses where I might go to a clinic and just do a talk with their clinician or clinical staff about the education that way. So that's the lectureship or presentation based components. And then there's more of the mentoring or the coaching aspect where you as an individual might say, hey, Robin, I'm entering the workforce. I have no idea. I'm self-employed. I'm a sole proprietor. I have to earn this. But do I have to pay taxes at the end of the year? Are they not taking source deductions? And I got to help this person understand
Mhm.
the minefield of what is entering first year practices. So
Yeah.
yes, I do a combination of those two.
Have you ever heard of the book The E Myth?
Yes, Michael Gerber.
Yeah. Yeah. Yeah.
I like that book a lot.
Yeah, that's what I think of because you're absolutely right. The people that own their own business or that want to own their own businesses, they're often like the practitioners don't really know how to become business owners because you were talking earlier about one of the things you could do when you're in your 50s or 60s and you're moving on from your practice, you can become an owner of a clinic. And so a lot of people struggle with that because running your own business is a totally different animal than working in your business. So it's really important to
Absolutely.
understand that. Yeah.
Absolutely. And most people who practice in our profession don't treat their individual name as a brand or a business. We
Mhm.
still think we're an employee. But as a business, you understand you got the brand, you got to market, you got to follow up, you got to do your P&Ls and understand the literacy of it. But the assumption that I can go from a 10-year practice to own a business is a faulty assumption.
Yeah. What's your goal here? What are you trying to achieve with your career? Do you have an idea of how long you'd like to practice, be a physiotherapist, and do you plan on retiring at some point soon?
Yeah, it's bold when I say it out loud, but in my head it sounds better. So I'm currently 35 years old, and I'm going to be, my goal is in 5 years, when I'm 40, to be in a position where I don't need to, but want to work. And I mentioned earlier, I love what I do, but can I accrue enough passive or semi-active income that I
Mhm.
can be in that position to make that choice, where I work instead of being 4 or 5 days a week, now I work once to twice a week. And the rest of the time I do more of the education business or spend time on pursuits I find interesting versus
I heard
being
I heard you're a
stuck or
good
forced.
golfer.
I don't know who you're talking to.
Yeah,
I golf a lot. Let's say that. I love to
yeah.
golf. And
Everyone was saying this guy. You got to talk to this guy. He's a really good golfer.
uh, you get lucky every now and then. But yeah, I love to golf. So that's why I'm trying to pursue something south of the border because I'm not built for the winter, as you'll
Mhm.
see. And I prefer the summer and I prefer playing golf. So can I do it south of the border? Absolutely.
Yeah. Cool. So 40 years old, I think that's a great goal. And like you said, you can, once you have that freedom, I think that's what a lot of us are striving for, really, because it's cool to have a bunch of properties or a bunch of cash flow or whatever. But if you're doing it aimlessly, it's kind of meaningless. If you do it with a very specific goal in mind and you know why you're doing it, then it makes life so much better.
Huge. And you've probably seen this with your podcast and helping people. How much joy do you get when you know you made a difference in someone's life?
I
Massive.
love that. Yeah, definitely.
Yeah, and it stays with you forever, more than buying an iPhone watch. Like this is material change on your happiness.
Yeah.
So my goal is to provide some meaning both in my life and the people I touch. That is the goal.
Yeah. Yeah, I think that's so important, and it's very fulfilling like you said, to be able to help others. And sometimes you don't really know what your impact is, but more and more now, when I go to like certain investor events, somebody will come up to me and be like, "Hey, I really appreciate that episode with this person or that person. Great advice, that kind of thing." So, yeah, I think that's way more meaningful, like you said, than the material things you get.
Absolutely.
Yeah. All right. So you've got several things going on. You're an investor. You have your physiotherapy business. You have your sort of coaching and training business going. How are you managing all this? What's allowing you to make sure you're spending your time in the right places?
I think it's a matter of priorities. And I tell my clients this. They say, Robin, I don't have time to exercise. I don't have time to focus on my financial goals. And I said, you and I have the exact amount of time in life. We have different priorities. So I'm a big proponent of not wasting time because, as we both know, time is the most valuable non-renewable resource we all have. We don't spend it the same. So I will plan out my day pretty meticulously in terms of down not to the minute, but every 15 minutes I'll do something to make sure I maximize that time. This summer has been a challenge because I don't think I told you this, but I launched an Airbnb in my own house only because I wanted to buy a whole bunch of new Apple products. I know I'm a big proponent of Apple, but I didn't want to spend money. I want to generate an income source that can teach my students. You can generate an income source to pay for what you want.
Yeah.
So I started to launch an Airbnb, and that consumed a lot more of my time. Listen, I'm in
Mhm.
Stony Creek. It's a single bedroom and a bathroom, and I didn't think I'd be this busy, but Airbnb worked wonders. So that really kept me on my toes, and that forced me to be very diligent with my time.
Mhm.
And it's you can do it. You just have to wake up a little earlier when people are sleeping and go back a little later when people are sleeping, and you'll get it done.
You got your Apple products?
Not yet. I'm waiting for Black Friday sales.
That's so funny. Oh man, it seems like all investors are the same. It's just I don't know what it is, but all investors that I've met seem to have this idea of like getting, making your money go as far as possible.
Oh God, yeah, oh yeah.
It's so funny. Like you can probably buy these Apple products no problem, but you want to make sure you don't spend your hard-earned income. You earn this extra income from your Airbnb. You buy the products on Black Friday. That's funny.
Oh yeah. And I need a new phone because my battery is dying quickly. So
Yeah, yeah, very cool. So I love what you're doing. I love that you're trying to help others. You're working on your own stuff, your own portfolio. Do you do you plan on working with others to grow faster, or do you feel like it's better for you to just kind of buy everything on your own, like not have partners, not split that sort of equity with others?
no, I would love to work with others because that's how I think we're built, right? We learn so much from the experiences and the mistakes of individuals we're closely with. So I'm a big proponent of having a slice of an orange or a watermelon than the whole grape, right?
Yeah.
So not only in material means and monetary means, but also in education and experience. I can't tell you how many times I've met investors that have gone through similar experiences but taken a different option or solution. I'm like, oh, I never even thought about that.
Hmm.
So I'm a big fan of either joint venturing or partnering or learning from individuals who are either older, younger, or have different trajectories than me.
Yeah, absolutely. Well, that's great. I think that's gonna you're gonna be able to go so much further by working with others and growing. Do you feel like there is anything we may have missed here? We covered we did an overview of your story and your goals and whatnot. Do you think there's anything specifically you'd like to touch on?
I would like people to know that I know this is more of a real estate centric podcast, and I love real estate. I would ask people to look at different alternative assets because nowadays, more than ever, there's a lot more accessibility to assets that may have once been for the ultra elite or the ultra wealthy. And when I
Mm-hmm.
speak about this, it's something like fine wine, fine art, or cryptocurrencies that may trade uh, with uncorrelated positions to traditional assets. So beforehand, forgive me for talking about this, but like wine or art are assets where you only think about the ultra elite to own it. But I can tell you from experience in the last year, owning wine and owning art, I don't know much about either. I'll tell you that, more of a beer guy. But those assets have only depreciated 3 to 5% relative to my stocks, which are 22 to 25%.
Yeah.
So if you can hold on to your currency and hedge your currency, A against inflation and B against other assets that are going down, I think you'll be better off. But just open your mindset to this,
Mm-hmm.
because I feel a lot of real estate investors are very real estate focused, and there's a need for that, but sometimes at their detriment because they close their mind off to other things that may provide favorable results.
Yeah. 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 I understand that. I started off like buying real estate and I'm still like relatively new. I started buying 5 years ago real estate. So I just this year started opening my mind up to other opportunities. I just felt like it was such a good way to grow and you can get amazing returns. Um, so I think it's important for people maybe to start in real estate, but definitely at some point start looking at other options because, for example, options trading can generate that cash flow that real estate may not generate for you, right? And fund your lifestyle that way. So you can combine these different tools that you have, the different knowledge that you acquire to create the life that you want.
Agree. Yeah, I like what you said because oftentimes when you get into real estate, there's like the shiny object syndrome. There's different ways to earn money in real estate. You can buy and hold, you can flip, you can do a wholesale, you can do lease options, right? And you're like, oh, what can I start with? But yeah, start with one kind of sector and then slowly branch yourself up if you want to other avenues.
Yeah, absolutely. All right, perfect. Robin, thank you for sharing all this. Do you want
Oh,
to
you're welcome.
share how people can reach you, the best way to reach you? And then if you have any services or any courses or anything, you can feel free to discuss those as well.
Perfect. Thank you for the opportunity. You can reach me. My business name is at Financially Fulfilled Physio at Instagram. So you can put that handle there. You can reach me personally at info@financiallyfulfilledphysio.com or go to the website at www.financiallyfulfilledphysio.com. I'm pretty accessible all the time and I love talking about this. So don't feel like you're burdening me with any questions whatsoever.
Awesome. Thank you, Robin. Really appreciate your time. Hope you'll enjoy the rest of your day and we'll talk again soon.
Will do. Thanks very much, George. Anytime you come southern side the GTA in terms of Hamilton, hit me up for some golf.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.